Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the September 4th, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I do want you to know I am absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com, if you'd be kind enough to put radio show question in the subject heading. And, of course, in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to last show. Right now, we got all the indices in the red, with the exception of the trannies. They're down, are up 16 points, 17 points. The Dow's off 350, S&P 55, NASDAQ 100, 330, Russell's off 20, semis down 48. So plenty to look at. Leading the charge dollar-wise, the upside, you've got Cooper Companies, FBL Financial, Broadcom. They're up 19, 11, and 11. To the downside, Amazon's up 137, Google 72, Shopify 58, Chipotle 34. Okay, enough of the numbers. Let's go take a look at what are the markets doing, support and resistance. You know, number of questions that have come in over the last several days about the question of, hey, are we going to get back to those March lows or not out here? So to begin that, let's just take a look at where are we today versus where were we back in 1929, 1930. Taking a look at the Dow. And that's what this chart here does. The very top portion of the chart is the Dow going back to 1929, the bottom that it formed. And what I did here for this chart is I timed the bottom inside the Dow after the 1929 crash along with our March 23rd bottom. So that became the 1929, but extending into, 1930, so forth. And extremely old, Jay. Don't you know that? In any event, out here, if we take a look at this chart, these two charts out here, so we're tracking now. We've got the beginning point. We're tracking how, what's the analog pattern out here? The bottom pattern is the cash Dow. So back in the 20s, 29, 30 time frame here, after the crash of 29, the equivalent date this year, if our Dow was following along the same analog pattern back in the 20s out here, the second top would have taken place, the final top, so to speak, before the markets move lower for a couple years out there, would be September 15th, 2020. Today is what, September the 4th? So you got 11 days from today out here. Now, what I want you to notice is when the Dow, so we want to always understand where is our breakout support. Where did markets break out from? And to make that determination, what you and I use, we use the TD9 count system out there. It's objective, it's very simple, and it's reliable. It's more reliable than almost anything you can find for support. How do we know? Well, just even take a look at today's activity out here. If you take a look at the bottom panel of the chart, what the Dow did was it got down to, or very close to, its breakout level, 27,686. You can also see there were two breakout levels. Now, there's three breakout levels that have formed since our March low. Those are designated by those red horizontal lines. Back after the 1929 crash up through this point in time, there have been two levels. So this had created back then two TD9 support breakout levels, both of which eventually failed, and we may see that occur this time too. So folks have been saying, hey, are we going back to those March lows? And I say, you've got to take this one step at a time. Back when that call was made, we didn't have any breakout support. And so without any breakout support, that was pretty easy. There was no support. Yes, you get back to those March lows. Again, back in the 20s, price was able to make it through those levels, 275 and 246. Well, if that's going to, we don't necessarily say this top has to occur on September 15th. Maybe it was September 3rd out there. And if that is the case, what we will see occur out here is we must see breakout support fail, 27,686. If that fails, and it could today, for all I know, if it does fail, then the next level will be 26,534, and below that, 24,781. And then if price is able to take that out, then the answer is yes. You head back to those March lows out there. So here's the analog pattern between where we're at now versus where we were back in that 29 time frame out there. So where are we right now, really, from a daily standpoint? Well, we were just taking a look at the Dow, but it is the NDX 100 that has been the big mover to the downside out here. So for it, we'll go over and take a look at the indice. What I can share with you is prices tested and rejected its breakout level. Let's look at some of the instruments that are underneath the covers here. We don't have to look at too many of them. So we'll begin with Microsoft out here. I think Apple is now the lead. I don't know if it's Apple or Microsoft that is the leader in the QQQ series ETF. Really, for our purposes, it doesn't matter. They're both leaders out here. And if you were looking for a buy area, well, that buy area was 207.51. What has price done so far? It pulled back, it has tested, and it has rejected that 207.51 level. Watch that at the end of today's trading session. Why? Hey, folks, if price Microsoft were to close below that, its next breakout area is 171.81 or 88 out there. And yes, that because of its weighting inside of the S&P, inside of the NDX 100, that would certainly take things quite a bit lower. But so far, all this taken place over a couple of days as price has pulled back to support. That's on the number one or the number two position inside of the NDX 100. Let's go take a look at Apple. What has it done? It too has pulled back to support its breakout level of support, 113.05. You can see it's been tested, it's been rejected. If price were to close below that, it doesn't have to be today, but if it does close below that, then the signal to you and I is it's ready to head back to 93.71. Once you break one level of support, you go down to the next. Where's Apple's counter trend rally? So let's say you can't bust them down, right? So here it goes. I got to give Tom another $1 out there. If you can't bust them down, what is price going to do? It's going to go ahead and try to bust them to the upside. Well, where is the upside inside of Apple? Pretty simple. It's Stevie's green line. It's really I'll give you a range, and the range would be 125.74. That's the center of its box out there, all the way up to the top of the profile, 129.24. That would be the range of a counter trend rally. And if Apple is going to do that, it can, and it most certainly can. It's tested and rejected key support out there. You know, and you're short the NQ, you got to say, hey, maybe be careful out here. We'll take a look at short-term time frames. What has Amazon done? Amazon so strong hasn't made its way anywhere near its breakout level, which is 29.96 out there. The price is still below support, and that's at 32.59. If price can close above 32.59, the top three instruments inside the NDX 100 will have held support. Something to think about. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So before that break, we were looking at the NASDAQ primarily. We'll go back to the to some of the other instruments inside the NDX 100 out here. If we do have a change in trend that is upon us, and we'll lay out the evidence, and we'll try to figure out whether we do or we don't at this stage of the game. But if we do, we are in the unfavorable seasonal cycle of the market. That lasts from, I know many people say from May through October out here. Really, for me, it's really more likely July 21st, typically on average, is when we see the seasonal high, and then the markets move lower into October. So if we do have a change in trend upon us, it is not unthinkable, even though it's transpired or it's occurred here much later, September 3rd versus July 21st out there, quite a bit later. Still, the target would be that mid-October timeframe when the Dow typically forms a bottom. So just to keep that in mind out here for you. Going back to, so we've taken a look at Microsoft, Apple, Amazon out here. Let's go take a look at Google. As we take a look at Google, it's made its way back to support. And its support area was either the breakout level of 1538.20, which it still is, or the bottom of its profile, which is very close to that level, which is around 1562. And we can see that price is tested and so far has rejected that level. So nothing broken here just yet, simply a completed topping pattern. In the case of Google, a sell the D point with price coming back to support. Nothing broken just yet. What we want to see for confirmation that this is a change in trend that will take us into that October-ish type time frame would in fact be support levels being broken. Otherwise, short of that, what we have to do is we have to take a look at the markets, try to figure out where could a counter trend rally take the markets to then jump on the short side then. And at that stage of the game, we won't really have a clear signal about moving to the short side because at this stage here, support levels will have held. That's what we do. We just simply make educated decisions out here. In the case of Facebook, Facebook has a TD9 count top. Price is pulled back to support. In this case here, you've got 4 levels of support, understanding that price is below Stevie's green line at 290.261. And that's because price was above the daily profile. So it's either the top of the box, the center of the box, or the bottom of the box. So it's 265, 270, or 274. 274, the top of the box, has tested was tested and is held thus far. 259.26 is the breakout level. So again, going through the instruments that are the large weightings inside the NDX 100, we're seeing these stocks come back and test key levels of support. We take a look at NVIDIA. Now we're getting into the 2%ers out here, so they don't have as much influence as Microsoft, Apple, Amazon, Google, Facebook, which is about 4% out here. So these aren't going to have, they certainly are part of the top 10 holdings, but they don't have as much of an impact. NVIDIA looks like it wants to make its way down to 438.33. It's below the bottom of its bullish structure daily profile. And therefore, its breakout level 438.33 sticks out as a target zone for it. The last one that we'll take a look at, again, another one of these 1 to 2%ers, is Adobe. It's got a nice Rhodes momentum indicator top. Price is below its daily profile. We have to go to the next level of support for it, and that's at 444.43, the TD9 breakout level. So that's what the top, 9 holdings really, because Google's broken into 2. I didn't pull up Tesla, so let me do that. Let me be accurate here. Let me be fair. Tesla now day number 2 below the bottom of its bullish structure daily profile. That says 287 is its price target as we look at it right this moment. Okay, sticking with the NQ out here, let's look at what's going on a short-term time frame. So the short-term time frame for the NQ shows us what? It doesn't show me a bottoming pattern. I'm sure I could draw in, although not with this package here, I could draw in an A to B equals CD to the downside. That's not what's so important to me at this stage here. More important is what is price doing. So we saw a bounce inside of the NQ. And the NQ bounced up to where? About 11,562. It was slightly above that, but on this 30-minute time frame, 11,562 happens to be the top of its profile for that time frame. As long as this profile remains in effect, and it is right now at 1:22 in the afternoon, what you're watching for some support standpoint, is 11,212. Any close below that, the NQ probably ends badly for the rest of the day. If price was able to take out 11,562 to the upside, then price would target 11,752. That is the top of the European opening range. If you can close over that, you're looking at a move all the way back to 12,271. I am not saying we're going to see a move back to 12,271 just yet. Instead, what you have to do is play this by the numbers. Play this by the numbers. Those numbers again, 11,212. 11,562, then 11,752. And anything above that, well, it does open up 12,271. So that's what's going on inside of the NQ. Let's go take a look at the larger profiles out here. Also give me a chance here to shift over to some other charts. So in looking at the other profiles, our TAS daily profiles out here, what we can see is that at this moment in time, 1:24 in the afternoon, the ES is below the bottom of its daily profile, as is the NQ, as is the Dow right now. So that key number, 27,997. Look, we already went through the TD9 count is the final level of support. That's what we began the show with. This also is a key level of support, but you're going to want to watch 27,997 at day's end. Because if the YM holds that, if the Dow Equity Future Contract is able to close back above that, well, the idea that if you can't bust them down, price is going to bust them to the upside has to totally be in play out here after looking at the NDX 100 top 9 holdings out there and putting it together with this. I don't know what the end of the day is going to look like, but what we do know is we've got the numbers. It becomes very easy, and then that's how the market will communicate to you and I what its intent is. With regard to profile levels, it is likely only the Dow that would be able to regain its profile levels. And if it doesn't, then what we're looking at is very likely come Tuesday, another retest of the TD9 breakout levels, at least in the Dow and the NASDAQ out there. Maybe it happens in the S&P 500 as well. The bearish thing today, inside these two charts, I've got 4 charts here. 2 of the 4 have very bearish patterns. What is that, Steve-O? I'm glad you asked. When you have a bullish structured profile, and if you look on the very left and the very right, you'll see the ES and you'll see the NQ. Both are bullish structured profiles. The Dow is also a bullish structured profile, but it hasn't performed that test yet today. That test is on a counter trend rally when you close below it, that price bounces up basically to the center of that box. Inside the ES Mini, it's 34.87. Inside the Russell 2000, it's 15.72. Price got close to those levels. Got close to those levels, gave it up, and now price is trading below the bottom of those profiles. So that is a really a bearish characteristic out there. With regard to the other equity future contract, that way you've got the short-term data out here. None of them generated the type of bottoming signal that you and I like to look for. Again, I'm sure I could draw in some type of A to B equals CD pattern. I did get wave number 7, that's letter G on the 30-minute time frame. But price here did the same thing as the NQ. It found resistance on a 30-minute time frame at the top of its profile. Here's your key numbers on the ES Mini for its short-term time frame. 33.60 is support. 34.12 is resistance. Above that, you're looking at a move perhaps up to 34.61. That's your ES Mini. This is Steve Rhodes with TFNN. See, we've got a couple of questions in the queue here via email. So we'll go answer those. And, of course, I'd love to hear from you. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 388, S&P 63, NASDAQ 100 down 370 points. Let's go to our first question. Coming in from Hector and Patty, the fuel injectors out here. And the question goes like this. This morning, I loaded up the wagon with the AUY at 585, targeting the July 27th high volume high at 661. What are your thoughts on this trade out here?
well,
My thoughts are best of luck on the trade. You most certainly want to see price hold 589, or at least the low of the hammer candle from August 25th out there, and that low is 574. Now, here's what will happen if you see a close below the 574 level. You should see a run down to 544 or 516, but that's not what you were looking for. You instead are looking for a move up to 661. And your question is, does Stevie see that in the cards? Do the charts really see that in the cards? The charts are saying no, not just yet out here. The reason they're saying no, not just yet, one, you've got a valid topping pattern out here, Rhodes Momentum Indicator top, wave number 7. The price has been below Stevie's green line for quite some time, continues to be rejected. It's actually been down below it since August 7th, and today is September 4th. So basically for a month out here, and it's just moved sideways. So price has been unable to take out resistance out there, Hector, and to me that says caution. Now, maybe it's not that big of a deal if price moves back to 544, but that is what appears to be the likely outcome to me. 544 is more likely at this stage of the game versus 661. So that's what the daily time frame chart shows us. Out of curiosity, let's go take a look at the weekly time frame chart. What do we have on a weekly basis? Well, on a weekly basis, we have price also below Stevie's green line, which is at 614. What price has done, has been unable to do, or has been able to do, it's been able to hold the top of its daily or its weekly profile, and that's at 584. A close below 584 by the end of the day here, boy, that would really be a signal to you, Hector, that price is ready to pull back. Now, we've got the daily levels we're looking at on a weekly. We're in the 490, 537 type area out there. On a monthly basis, just take a look at AUI. I don't really have anything out here worthwhile to take a look at the moment. So, Hector, it looks more like 544 would be your potentially your buying opportunity in Hecla, because price close below that, you're looking at 516, below that 456. But right now, AUI looks like it wants lower price versus higher price. Hope you and Patty have a fantastic weekend. Next question coming in from Jerry. Jerry writes in, he says, I'm short interested in daily, weekly TAS profiles you have, and if you think we can get into the sixes with this one. Well, this one is CDE. And you're short this stock here, which trades for $7. Ooh, be careful out there. But I don't like shorting anything that is priced at these levels. Your downside gain would be $7.41, and a buyout, your upside risk, it's unlimited. It's just that, so no problem with shorting. It's just low-valued stock. Not that high-valued companies can't be bought out. It just is there's more dollar risk in shorting a stock that's under $25 than there is a stock that's under $200 or $400 or anything much of more greater value than $7.41. I know that's not your question. Your question was, can this get into the sixes? And the answer is yes. Does this have valid topping patterns? Yeah, wave number 7, Rhodes Momentum Indicator top. So it's got all of that. Prices trading below the daily profiles out there. You were wondering where those were. Well, the daily profile, the bottom of the box, what you would be concerned with is $7.83. Where is this likely headed to, short of some type of bottoming signal and pattern? $5.38 is its daily breakout level out there. So, yeah, it's got that chance. It's just I wish it wasn't a $6 stock. Now, what hasn't it done? Well, this week, what CDE hasn't done, it has not busted through Stevie's green line on a weekly basis. Do I have a valid topping signal out here? I do not on a weekly time frame. What we do have is price pulling back and testing support. So that's 725. So that is really going to be your key level of support. The fact of it is your real key level of support is $7. That would be the bottom of the weekly profile. So in order to get down to your sixes, you're going to want to watch stock behavior at $7.03. That's assuming it can even get through 725 out there. But yes, the daily says it wants to go lower, but now you know where your battle is. And your battleground is that weekly oscillator and change line, which is a beautiful thing out here to be able to have that. Again, no moving average, very specific set of processes to develop this. If you'd like to learn it, just simply come on over to the homepage at TFNN.com and subscribe to Mastering Probability, even if for just a weekend, this weekend, a holiday weekend, to learn those patterns. Those archives are up there, and you'll gain access to it, and you will have some amazingly, extraordinarily valuable tools out there to assist you in calling the market. So that's what we see when we take a look at CDE. I believe CDE is Coeur d'Alene. Is that? But I could be wrong on that one. It's been a while. Yeah. Well, I guess it's changed names. Core Mining out here. Best of luck, Jerry, on that trade. LB writes in, and LB wants to take a look at the XLE. That is the energy sector out here. So we'll go ahead and get those profiles loaded. You've got your daily, your weekly, and your monthly time frame. Prices pulled back to support, which is the bottom of the daily profile, which is priced at 34.67. You're trading at 34.63. Lee's question goes on to read like this. Hi, Steve. Hey, Lee. Hope you're doing well. I am. Thank you. Can you take a look at XLE? Haven't bought yet, but looking to go long here. This will be a short to medium term trade. So price is up at support on the daily, but price is below support on the weekly out here. And the weekly support level is 36.25. Price has not taken out the low of July 6th. That is 34.24. There was 119 million shares, but you're moving into it with volume, 123 million shares already. So what this says is, Lee, watch. A test and rejection of a swing point on a weekly basis would be a test of that 34.24 level. But, of course, you wouldn't get that full test until next Friday. But even next Friday, it's just a 4-day week, and it's a holiday, so your volume, comparisons, you're going to have to do a little bit of manipulation. But is this a time to go along the energy sector, the XLE? Let's pull over my other charts and just see if there's any other tools to assist us, Lee and I, with regard to this decision. So let me get back to the daily time frame. The daily time frame, we know price is up against price is up against support. The bottom is profile. It's going to be bar number 7 of a TD9 count out here. And if price is able to get below the bottom of that profile, 31.39 becomes the breakout level. And I would rather see you, Lee, try to take that short to medium term trade as price gets down towards that 31.39. Or let's take a look at Tuesday, Wednesday, and Thursday. So by next Friday, I won't even be here next week. Well, I will be here on Tuesday. So my schedule next week, just so you know, for those of you listening to the show and are looking for information, I'll be doing the show on Tuesday, normal time, Wednesday, 8 to 8:30, and then that's it for the week out there. But what you'd be looking for, Lee, come Wednesday, Thursday, Friday is a TD9 count out here pattern that completes above 31.39. And then what you'd really like to know is where is Stevie's red line, because you'd wait for price to get above that before pulling that trigger out there. That is on the XLE. Steve Rhodes with TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow down 377, S&P's off 60, NASDAQ 100 down 332. So let's go to our next question, the only other question I've got right now in the queue. This one coming from Tim Horton, Donuts out there. It's actually from Tim, but, you know, I guess I'm on hockey overload out there, and every time you look at the screen, you see a Tim Hortons logo somewhere out there. They're playing their games up in Canada out there, right, Canada. And, so I've never been to a Tim Hortons out there. I know we have them down here in the States. I'm not sure if we've got them in Florida or not, but got to be good. How bad could a donut be? I do remember seeing a Tim Horton donut. It looked a lot like a Krispy Kreme out there. But let's not get overloaded on sugar, because Steve-O could be bouncing off the walls. And the last thing I need is a little bit more like a 5-hour energy shot out there. I mean, how would I calm down? In any event, let's get to Tim's question already. And Tim's question was about Amazon. AMZN is the ticker symbol. And Tim's question goes like this, Steve. What is a range Amazon could go to on a bounce out here? So, Tim, this is the daily time frame chart out here. And on a bounce, I would say that the price target levels would be I'm going to give you 3 price target areas. The first would be 32.59. You're trading at 32.30 right now in that range. That is the bottom of its bullish structure daily profile. The second target would be the center, and that would be 32.81. If price is able to regain that and close above 32.81, now whether that's today or that's on Tuesday or Wednesday or what have you, if price is able to close above the center of that profile, that would say counter trend rally is over, or counter trend rally has further to go, and that's what you were asking. That further to go would be Stevie's green line, which is up around the top of the daily profile. And therefore, if price is going to move higher, so too is that green line, and that makes this pretty easy. The top of the profile on the daily basis would be where you could see that final range, and that's in that 34.53. So the answer to your question, Timmy, is 32.59 to 34.53. That's based upon the daily time frame chart out here. We believe that is a possibility as long as price on Amazon is able to stay above the top of its weekly oscillator and change line. And that's at 32. I couldn't tell you for sure. So because I want to tell you for sure, let's get the data box up here. So let's show the data box, and then let's figure out where that green line is. That is at 32.10. Basically, as we speak right now. So as long as Amazon, Tim, closes above 32.10, then you've got that opportunity for a bounce. If price closed below 32.10, then I'd have to say, well, certainly don't carry that trade over the weekend, even though it could work. Don't do it, because what the weekly chart will be signaling is, hey, I want to move much lower out there. So that's your answer, Tim, and I gave you a little extra there, a little donut. Since I don't know what kind of donut you like, I'm going to go ahead and order you an apple fritter. I mean, come on, apple fritters. Does it get any better than that? It probably does. You guys probably have your own favorite donut. My favorite pastry, so to speak, out there, Boy, that's a tough one, isn't it? What would be your favorite? I'd have to go with, I like those. Not that I've ever had one, but if I were going to try one, I'd probably try one of those bear claws at Panera Bread out there. How bad can they be for you? Actually, I know they're really bad for you, but boy, they taste good. Okay, so no other questions that we've got out here. I'm sure there are questions about Goldilocks out there, right? We haven't talked about gold. We should talk about gold. We're going to talk about gold. So let's go take a look at it, try to get a feel for what it's doing. It's only back $2.70. What we want to understand is, hey, what's gold done here today and what's it done for the week? So let's begin by taking a look at the weekly time frame chart for gold. It's trading out at 1935. That, of course, was just simply a stall technique because I'm waiting for my other chart here to populate. But voila, we've got it. So now when we pull gold over, here's what we can see. Price is below 1957.40. Why is that important, Steve-O? It's important because that is its weekly oscillator and change line. Now, why is that important? Well, the reason that's important is because a couple of weeks ago, this topped with a TD9 count. It was bar number 8. Now, what you've seen take place over the last 3 weeks is price push its way down to Stevie's green line. And by the end of the week, it has held. Guess what? Not holding right now. And although very subtle, what gold is now signaling to you, and yes, you've got to have those two closes, so next week's close would be just as important. But if we do get that second close, what the signal to you and I is gold is sneakily. Sneakily, is that a way? Sneakily, it is. Let's go ahead and, if we can, maybe somebody, some attorney out there, and maybe we can trademark the word sneakily out here. But it could sneakily be headed down to 1730. That's the message of the weekly time frame. So watch 1957.40. Now that is in competition with what the daily time frame chart is telling us. What do you mean, Steve-O? Well, if we take a look at the daily time frame chart, let me just pull open the gold contract. Let's pull this open here. Let's go ahead and how about that? Perigee, that's still in play out here for gold, 1940.50, so this would be two closes below that. But I believe we've got a new apogee pivot point coming soon, don't we? So I think it's got to be sometime next week. Regardless of that, I wanted to turn on the profile levels before I sidetrack myself out there. See, it's got to be a problem, right? I mean, how can a guy who's talking to himself get sidetracked? For me, it's not that tough. Here's what we also know about gold. So you've got the bearish side, so to speak, the subtle message out there. That subtle message out there, thank you, Mr. Bill, that subtle message out there was a close below Stevie's green line on a weekly basis. So, boy, does that make 1920, the bottom of its bullish structured daily profile, really important here. So, until that fails, the signal on the weekly, which the signal on the weekly needs 2 bars anyways, so that would be next week. So come next Friday, and I won't be with you. Let's assume profiles haven't changed, and gold is trading below 1920. We already know gold is below the weekly Stevie green line. What's that telling you? Well, first, it's telling you about an A to B equals CD to the downside. It's telling you about a potential Gartley buy that could be setting up. We also know we got the 1730 number on the weekly time frame. Here, if we take a look at the potential A to B equals CD pattern out here, that A to B equals CD pattern would take you into 1809, 1751, 1676. It's more likely the latter two because gold typically does more than a one-to-one A to B equals CD pattern out there, period. So 1920 is going to be the key level for Goldilocks over the coming week. If I take a look at a short-term time frame, again, we've looked at a weekly, now a day, then a daily. Now we're taking a look at a 30-minute time frame chart. We see a Rhodes momentum indicator bottom out here. So what do we expect? I would expect, technically speaking, you would expect, because price is also above Stevie's red line out here at 1933, that price is going to move up into the top of that 30-minute profile, and that's 1939. All we're looking at is the exact same patterns that took place inside the ES Mini, inside the NQ, and so if you're long gold on a short-term basis, look for it to run into resistance at that 1939.10 level. That's what we see when we take a look at gold. Silver, a whole different animal out here. If we say a whole different animal, well, it hasn't gotten down to test the bottom of its daily profile out here. Why not? Because it, quite frankly, would like to get up and test the top of its profile, 3019. Probably not. Steve Rhodes with TFNN. We'll finish off silver we get back from this break. Dow's down 363, S&P off 59. Be back in a few.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and a need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. Today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we were taking a look at the silver before the breakout here, and you can see a clear descending trend line on the December contract here for silver. You do see a bullish structured profile, but more likely than not, where silver's headed to is the 24.32 to 24.97 level out there. But it won't really get moving to the downside, I don't think, until gold takes out 19.20. Silver has, just like gold has a topping pattern on its weekly basis, so too does silver, but it's a stronger pattern, and that price has not made its way back to Stevie's green line, currently at 24.39. Here's your sell, the D point, your A to B equals CD pattern out there. About 2 weeks ago, you had the dark cloud cover. This week, you had a bearish engulfing candle. So you've got the valid topping signals out there. Folks, just be careful inside those instruments, inside the metals marketplace out there. Looks like the final question that we will end the show with comes from John in Philly, and his question were targets for the S&P 500. So with regard to the S&P 500, daily targets, John, you must see price close below 33.2644. That is breakout support. Until that happens, We don't know whether price will head lower. If it does, then what we're looking at is 3204 and then 3047. That is on the daily time frame. On the weekly time frame for the S&P 500, the resistance level first up is 3307. Price is above that. So it's really a support level out there. Below that, John, I don't have anything. So we would resort back to the daily time frame for breakout support levels. And voila, on a monthly time frame out here with regard to support, we're at the 3256 area. So those are support areas for the S&P 500. If we summarize today's activity at this stage of the game, what we've seen out here are tests and rejections of support on a holiday Friday. You'd have to say most of the selling is likely done. No guarantee there. But watch those levels that we took a look at earlier. And remember, if you can't bust them down, okay, here we go. I got to give Tom $2. What will price try to do? No, you're going to give Tom the extra $1. What will price do? Try to bust them up. Folks, have a fantastic weekend. I look forward to seeing you on Tuesday. Take care.